Hey everybody, it's me, Gregory Mannarino, back again on a Sunday, September 30th, 2018, to do my newest segment of Markets A Look Ahead. Going to be an interesting one in my view. It's always interesting in my opinion here. We're going to try to make some sense of the senseless. Let's put it that way. But in some ways, it all does make sense when you have a managed market, because that's what we have here. And I want to touch on that too. Number one thing, we're going to go over to my website, traderschoice.net. There is a link in the description of this video. We're going to talk about some charts. We're going to put a perspective on a whole bunch of things and see what we come up with. So, if you are not on my website watching this video, for which I hope you are, click on the link in the description of this video. It will take you to my website, resume this video, and then we're going to talk about a bunch of things. Now, if you happen to be on my lovely website, let's get started. Number one, let's put a few things into perspective here. Again, we are seeing things in this market that in a real market would make no sense at all. Simultaneous rallies in the bond market and the stock market, this is unheard of. You don't get simultaneous rallies in the bond market and in the stock market. It just doesn't happen. But it seems to be the new norm. Every single time stocks start to fall into some pressure, a miraculous buying spree in bonds occurs that keeps rates low. Now let's talk about that real quick. So last Wednesday we heard from the lovely Federal Reserve, who did raise rates. Meanwhile, on Wednesday, the day the Fed raised rates, the U.S. 10-year yield was 3.11 or so. By early Friday, it dropped to 3.03. So rates plunged, yields plunged, and then there was a correction back up to 3.06 by the end of the day. This is still a huge move. So the Fed raises rates, but yields drop by the end of the week. It is very possible, in this guy's opinion here, that we are going to see that trend continue. Even though the Fed has raised rates, there's the potential here to see rates drop because, again, the bond market is being managed. It's not real. Nothing is real in this market, but that's our strength. Understanding that this market is rigged, it's a beautiful thing in many ways. You know exactly what you need to do to capitalize on this from any perspective that you want to look at it. Debts and deficits are going to continue to explode. Central banks have no choice but to continue to inflate, print cash out of thin air, buying up debt. That means you need to become your own central bank, bet against the debt. You know this. It's so simple. It really is. That means holding a hard asset, but it also means taking advantage of the stock market. It's right now, this is the gift that keeps on giving, and it's being engineered to do that. To enrich the 1% at the expense of everyone else, who's being used as a tool. The middle class is always used as a pawn in a never-ending, terrible game. And we also know the Fed is a serial bubble blower. They blow these bubbles up and they allow them to deflate, transferring wealth from the middle class to the upper echelon of society. But we're not going to let that happen to each other. Not on my watch. All right, so number one thing I want to do, go all the way down on this page here on my website, traderschoice.net. Let's look at this gauge. Now, admittedly, for the first time ever, this gauge here, the technical analysis of SPX, or the S&P 500, was wrong for the first time last week. I was a little surprised about that. Like I said, it's never been wrong before. Last Sunday, it said buy signal. Markets did finish lower, not by much. I was also wrong. I had said the market would finish the week higher, but again, a crazy week here with the Federal Reserve, with all this stuff that's going on. But for the most part, again, if you've been following these segments I've been doing, markets are looking ahead, I have been right at least 70% of the time, probably more like 80. That's the truth. You don't believe me? Go look back on every one of these videos. And we're going to cover that. So right now, this gauge here is giving us what I would say is a weak buy signal. We all understand that we're going into October. You hear a lot of the talk that you hear every single year, Shocktober, you know, this is it, the market's going to crash. Look, me personally, I am trading the market I have, not the one I'm thinking about is coming down the pike too far. And as a matter of fact, let's talk about that real quick so you can understand my perspective. Let's go up here and look at the trading chart I have dead center of this page under the video. What I want you to do here is look right over there. I am posting all of my own credit spreads right here. You know, I exclusively trade credit spreads now. Have a look at these here. Let's decipher what's going on. And for all you traders, pay close attention to this. It will help you see how I am structuring my own credit spreads. Okay? I refuse to let any of you lose. It's not going to happen. You know that. I am fixated on this. So obviously you got the ticker symbol. If you notice, these are all individual stocks. They're not indexes. It's too difficult right now to trade an index in this right now. So we got to be more or less stock pickers. I trade large cap stocks. All of these are large caps. So right off the bat, in the beginning here, you got the ticker symbol. These are all weeklies, as you can see. The expiration date on all of these is October 5th, or this coming Friday. The numbers with the minus sign, those are positions I have sold onto the market. The ones I bought, as you can see how these are set up, it's kind of like an insurance policy. You understand? And if you understand anything about how calls and puts work, and you look at the current price action of any one of these, well, you'll have a better idea of how I am playing this. So let's now look at a couple of other things that are super important. And you know what they are. Bond market, US dollar. Everyone is fixated looking at the stock market, not you. You're going to be looking at the bond market, number one, and then the dollar, number two. So let's look at this bond market chart right over here. Look, in my opinion, we're going to see more propping up coming this week, forcing cash into the stock market. That's the truth now. A lot of this depends on the dollar. There is a compensatory mechanism. Look down at that dollar chart, screaming up. They're going to need to keep the 10-year yield suppressed as long as this dollar remains in this upward trajectory. Now, something very, very bullish is going on here for gold and silver. That brings me to my center chart here, trading chart. Before we even look at the stock market, while we're on the subject of gold and silver, let's look at GLD. See where it says SPX here? Put in GLD, enter. Okay, now, still in this bottoming phase, it looks like to me, but Friday, despite the stronger dollar, both gold and silver put on a nice, strong gain. Let's look at silver. Put in SLV, enter. Now, what I want you to do with this chart here, click on it, and then scroll up. In other words, to bring the chart bigger. You can see here, this is looking pretty bullish to me, especially in the face of the stronger dollar. You can do all this chart here. I have just updated it. You can do all kinds of things with it. You can click on it. You can scroll up and down. That'll make it bigger. It'll make it smaller. You can actually blow up the whole thing. You got all kinds of tools to use in this, and you can put in any ticker symbol you want. Now let's go back to SPX. Enter. Put SPX in there. This is, again, the S&P 500. You can scroll in and out if you want to once you click on the chart. Do that. Let's scroll in here. This is, again, looking bullish to me. Look at all of these indicators, the Fisher 9. And look at the relationship between the price action, which you can see the red and the green candles on the very top, and then these indicators. Look at the MACD here. Very bullish. It's very bullish. So just by looking at this here, all right. Now I'm not saying that tomorrow, Monday, the market's not going to fall under a little bit of pressure, but the trend here, look at the trend here. It's still higher, and the environment of risk is being maintained via the bond market, buying up those bonds, keeping rates suppressed. It's so simple. There's nowhere else to go. So, you could sit here and you could look at what's going on and say, okay, well, where's cash most likely to go if rates are being kept where they are, if the dollar is doing what it's doing? Where are you going to put your cash to really make money? You want to put it in the bond market? You've got to be high. You know that. It's still yielding nothing. You want to put it into the stock market until we hit the freaking wall. And we're going to hit that wall. Until that time, this guy is going to bob and weave his way across this market using the credit spreads that I post right here on this page. I am really trying to make this easy for you, all of you out here, to capitalize on this market. I can't imagine anyone else is doing the same thing. I hope you all are taking advantage of this. It's seriously true. All right, now I know this is getting kind of long-winded here, people, but let's look at this again. I know we're going into the month of Shocktober here. In many ways, we have to disregard a lot of, in fact, everything that we've learned in the past with regard to this particular month. Why is that? Because the market's not real. It's fake. It's being engineered. Cash is being forced into the stock market. So we can't look at historical norms anymore. For all we know, this month here could be a record setter. And I wouldn't be surprised to see that with regard to the stock market. It's not real anymore. There's no aspect of this market that is real. No asset at all has a price discovery mechanism behind it that's real. So again, this is our strength, understanding what's going on here. And we all do know that this will correct to fair value. And think about what that means down the pike here at one particular time when every asset now that has been inflated beyond the point of recognition corrects to fair value, what that's going to mean for the middle class, their investments, their home prices, their stock portfolios, their 401ks. Yes, that's coming down the pike. But right now, you and me are trading the market we have, not the one that's coming in Shocktober. We're trading the one we have here, right now. And if you're a trader, this is the gift of gifts, this market. Abe, if you're a stacker, this is the gift of gifts on top of gifts. Because again, what are world central banks going to do, including our Fed? Inflate, inflate, and then inflate more. So you know what to do. Bet against the debt, become your own central bank. I don't care what you may hear from naysayers with regard to physical gold and physical silver. They just have no idea how market cycles work. You have risk on, you have risk off. Or in this environment, we have rallies in the bond market and rallies in the stock market at the same time. This is not something that is normal. But anyway, I think you understand this. It's just so freaking out of control. All right, look, with that said, please take advantage of the things I have here on this website. This trading chart here, it is epic. The things you can do with it, scrolling in and out, changing symbols, all kinds of drawing tools. Take advantage of it. It's free. Watch the bond market chart, watch that dollar chart, and see if you can get into that chat room, because I can never get into my own chat room anymore, so it's full. But I'm happy about that. So it's for all of you, and it's the truth, and I do care. I will see all of you in the morning. I hope this has been informative.